कर लेता हूँ. Okay. So this is the question we are doing for AS Accounting Partnership, May June 1823. AS Accounting Partnership, May June 1823. It's a simple question of partnership where Carlos and Erika were in partnership for several years. But other than partnership account, they have basically they are managing two non-current assets. From 1st August 2016, our financial year starts and ends at 31st July 2017. Plant and machinery and motor vehicle. Accounting policies in respect of depreciation are: plant and machinery is depreciated using the straight line method at 10% per annum. Motor vehicle are depreciated using reducing balance method at 20% per annum. So it is a complete part of depreciation also, which is involved in that. A full year depreciation is charged in the year of purchase, but none in the year of disposal. No adjustments have yet been made for depreciation or disposal of the machine. It means that for depreciation, we have not recorded depreciation up till now. This is what the question is basically asking us, that we have to record the depreciation. So देखते हैं जी इसको हम. The profit for the year before any adjustment was 37490. So before the adjustment of depreciation, we have been given that the profit is 37490. So let's move forward. Revised profit before appropriation for the year ended 31st July, you need to calculate, because you have not subtracted depreciation from this. So you need to calculate the revised profit, and then you have to go for the appropriation account. So let's go for the revised profit first. Profit is basically 37490. So let me calculate it. So the profit is equal to 37490, but we are yet to subtract depreciation. Let's calculate depreciation on motor vehicle first. So motor vehicle are depreciated using the reducing balance method. So let's calculate depreciation on straight line method first, which is plant and machinery, because it is rather more easier. So when you calculate depreciation, you have to see that either one of the asset has been sold. On 1st December 2016, a machine was sold for 6,800. The machine had been purchased for 10,000 on 1st May 2015. So let's see. Plant and machinery is depreciated using straight line method. A full year depreciation is charged in the year of purchase and none in the year of disposal. So let's calculate depreciation on the asset sold first. On plant and machinery, the machine which has been sold for 6,800, it has a cost of 10,000 on 1st May. So let's calculate. On 1st May 2000, when it has been purchased, 1st May 2015, it has a cost of, on 1st May 2015, it has a cost of 10,000. And the depreciation rate, let me see, is 10% per annum on straight line method under annual basis. So 10,000 multiplied by 10%. So the depreciation for this is 1,000. But remember this, that the asset has been used. Let me show you, because it will become very easy for you to understand the things. Because the annual basis have been used. So this asset, which is purchased on 1st May 2015, has been used till 31st 7 2015. Financial year is complete. Yes. How come, sir? Because you have purchased the asset in May. So May, June, July, that's it. 5, 6, 7. Even you have used the asset for 3 months, but you will calculate depreciation for the whole year. Why, sir? There is a reason. Because the straight line method is used and we are going for the annual basis. Full year depreciation is charged in the year of purchase and none in the year of disposal. So we are done with that. That even we have purchased it on 1st May and we have used only for 3 months, we will calculate depreciation for the whole year. Let's move forward. Now, again, it has been used from 1, 8, 15 till December 1st December 2016. So it has been used till 31/7/2016 for the whole year. Yes, financial year starts from August and ends at 31st July. This is our financial year. So again, we will calculate depreciation under straight line method on cost at the rate of 10% for the whole year. That is again 1,000. Now again, the asset is being used from 1, that is 1/8 2016 till 1 December 2017, right? Sorry, 2016. But for these months, which is August, September, October, November, 4 months, we will not calculate depreciation on monthly basis. Why? Because we are using annual basis. So in the current year or in which the asset is being sold, we will not calculate depreciation for this year. So we will not calculate depreciation for this year because we are using annual basis. This asset has been sold in the current year, which starts from 1st August and ends at 31st July 2017. On 1st December, it has been sold. So the total depreciation on the asset sold is 2,000. So let's see. The cost is 10,000, total depreciation is 2,000, and it has been sold for 6,800. So now you can calculate the profit. 10,000 is the cost minus total depreciation. So book value is 8,000, and we have sold it for 6,800. So we are going to have a loss of 1,200. So 1,200 loss we have to calculate, and that will be subtracted from here, plus loss on machine, and that is 1,200. So we have to subtract it. No adjustment had yet been made for the depreciation or disposal of the machine. So we are done with the disposal of the machine. Now let's calculate the charge for the year. Charge for the year, we have steps. First step, calculate depreciation on the newly purchased asset. Have we purchased any machinery? Yes, we have purchased new machinery for 7,500 on 1st November. So let's calculate depreciation. 1st November, we have purchased. So we will calculate depreciation for the whole year. Why? Because 10% method is used. 10% is the rate of depreciation, but we are using annual basis. That's quite easy. Otherwise, we would have charged depreciation from November, December, January, November, December, January, February, March, April, May, June, July, 9 months. But here we will not go for it, right? So what is the cost of the new asset? That is 7,500 into 10%. We have 750. Then calculate depreciation on the asset sold, but that is only in case of month-to-month basis. This is not month-to-month basis. Next, last step is calculate depreciation on the existing assets. That is 65,000. Cost is 65,000, and 10,000 of the asset has been sold. So we can calculate 65,000 minus 10,000. We'll get 55,000 into 10%, because we have to calculate depreciation for the whole year because we are using annual basis. So that is going to be 5,500. So 5,500 plus 750 will get the depreciation on machine, and that needs to be subtracted from the cost. So let's do it. That is going to be 6,250. So 6,250. We will subtract the depreciation over here. Okay. Now again we will subtract plus depreciation on motor vehicle. It has to be calculated. Yes. We haven't sold any motor vehicle yet, but we have purchased a new motor vehicle for 14,000 on 1st February. And again, the motor vehicle depreciation is going to be charged under reducing balance method at 20% per annum. But a full year depreciation is charged in the year of purchase and none in the year of disposal. Annual basis are being used. So that is quite simple. But reducing balance method is still there. So 1st February, we have purchased new motor vehicle for 14,000. So we'll calculate depreciation 14,000 multiplied by 20% for the whole year. That is 2,800. Next, calculate depreciation on the asset sold as it is annual basis. We will not calculate depreciation on the asset sold. Now we'll go for the depreciation on existing assets. So the cost is 18,000 and the depreciation is 3,600. So 18,000. Any asset which has been sold? No. So what we are going to do, from 18,000, I have to subtract the depreciation, whatever has been charged, that is 3,600. So minus 3,600, whatever is going to be the answer, I will calculate depreciation on that. Yes, because motor vehicle has not been sold. No motor vehicle has been sold. Sale of an asset is a part of machine on which we need to charge depreciation on cost. That is 14,400 multiplied by 20%. We'll get the depreciation amount. So 14,400 into 0.2. Oh, sorry. 14,400 into 0.2. That is 2880. Okay. Now we'll calculate add them up. 2800 plus 2880. That is 5680. So I will subtract depreciation here. 5680. So let's subtract it. Out of the profit, we will subtract this and we will get the profit for the year, which is the corrected profit for the year, because the depreciation has not been subtracted from this profit yet. 37490 minus 1200 minus 6250 minus 5680. So the answer is 24360. Okay. Any problem till here? We are done with that. Now I will move forward. This is the part of the depreciation which has basically come in a question from the partnership. Next part is calculate the revised profit before appropriation. We are done with that. Now he wanted us to go for the appropriation account. I will show you May June 1823 appropriation account. So let's see. The terms of the partnership agreement are as follows. Annual partnership salaries. Carlos 10,000 and Enrica, which is given in the question, that is Erika, sorry, 15,000. Interest on capital is 3% per annum. No interest is to be paid on drawings up to 20,000. Interest at a rate of 6% is to be charged on any drawings in excess of 20,000. And profit and losses are to be shared in the ratio of capital invested. The following information is also available. Capital accounts are given 84,000 and 28,000. Drawings are 15,000 and 25,000. So it means that Carlos is not supposed to pay any interest on drawing because his drawings are less than 20,000, which is 15,000, where Erika has to pay 6% interest on drawings, right, in excess of 20,000, which is 5,000. So let's prepare the profit and loss appropriation account. We'll start from the dollar sign here. Profit for the year I'm going to write, which we have calculated already. Means it was not given actually. We have subtracted the depreciation to find the correct amount of profit, 24360. Now I'm going to add interest on capital, which is only on one of the partners, which is Erika actually, because his 5,000 drawings are more than 20,000 by 5,000, and he has to pay interest at the rate of 6%. That is going to be 300. Let me show you. No interest is to be paid on drawings up to 20,000. So that's why Carlos is not going to pay interest on drawing. Interest at the rate of 6% is to be charged on any drawing in excess of 20,000, which is 5,000 in excess. So 5,000 into 6% is going to be 300. Now I will subtract less salaries, or you can write interest on capital also first, doesn't matter. So salaries are given. They are annual partnership salaries are Carlos 10,000 and Erika 15,000. I will write here Carlos and Erika, that is 10,000 and 15,000. So the total is going to be 25,000. So let's calculate it. Let's calculate the answer. Let's calculate the answer for this. 25,000 is the amount of salaries. 24360. Let me calculate. 24360 plus 300 and minus 25,000. That is negative 340. So it is coming negative 340. Now, less interest on capital. So I will write less interest on capital. That is again for Carlos and Erika. Yes, there can be profit also, there can be loss also. So here we are facing a loss basically of 340. So interest on capital, he has clearly stated the interest on capital is 3% per annum. So 84,000 and 28,000 is the amount of capital, right? So let's write it down. 84,000 into 3% and 28,000 into 3%. So can you tell me what is the amount will come? $84,000 into 3%. Okay, if you are not telling, I have to calculate into 0.03. That is 2520, and 28,000 into 3%. That is 840. Now you will add it up. We will add it up. 840 plus 2520. That is 3360. So I will go for the negative 3360. Now you can calculate it easily. Your loss will be increased, obviously, and loss is supposed to be shared also in both the partners. So 340 plus 3360. So there is going to be a loss of 3,700, which he has clearly stated that this loss is supposed to be distributed between profit and loss are to be shared in the ratio of capital invested. And now he wanted us to prepare the appropriation account, which we are done. And on 31st July, the balances on partner's current account at the start of the year is Carlos 1300 credit and Erika 250 debit. You have to prepare the current account of both the partners. So let me prepare, and the ratio of the profit, which is loss, which is going to be shared between them. I will also show it during the question. I will prepare the current account. And in the current account, you remember that on the credit side of current account, the current account will increase. And on the debit side of current account, the current account will decrease. So profit and interest on capital, salary will come on the credit side, and losses or drawings or interest on drawing will come on the debit side. So देखते हैं इसको हम. Here comes the, what should I say, Carlos, C and Rika, E. Then again comes here C and E, C and E. So let's do it. How we are going to do that? The current account of C and E we can prepare easily. Like this. Okay. Now first I am going to write the brought down. The brought down Carlos is 1300 credit, whereas Rika it is 250 debit. So for Carlos, I'm going to write here that will be 1300 credit. And for Rika, I will write here brought down, which is going to be 250 debit, because it is having a loss. Then loss will be shared between the two partners and their capital ratio. So capital ratio is basically, it is right in front of you. It is 84,000 and 28, or 84 ratio 28, one and the same thing. We can simplify it by maybe by 7. 7 ones are 7 and 7 twos are 14. So that is 12 ratio 4. Or if you simplify it with again 4 threes are 12 and 4 ones are 4. So the total is going to be 4. So 3 over 4 and 1 over 4. So loss of 3,700 is going to be shared between Carlos and Erika in the ratio of 3 over 4, 2775. 3 over 4 is 2775. And the other is going to be 3,700 into 1 divided by 4. That is 925. Okay. So loss we have shared. Now comes on the credit side, we have to write the salaries. Then we will go for interest on capital, right? Or if anything more will be there, interest on loan, it will also come on the credit side. So that is 2520. And for Carlos, interest on capital, and 840 for Rika. Salaries are quite simple. They are 15,000. Sorry, 10,000 and 15,000. Let me check also. I might have written it wrong. 10,000 and 15,000. Let me see. Hopefully, I'm right. Yes, 10,000 and 15,000. And now comes the drawings and interest on drawings. So I will write Drawings first. Let's write the drawings first. And then I'm going to write the interest on drawings. So drawings are already there. And the drawings of both the partners is given. That is 15,000 and 25,000. So I will write here drawings on the debit side because it will decrease current account 15,000 and 25,000. Interest on drawings is on Carlos, there is no interest on drawings, but on the Vika, 5,000 into 6%, there is interest on drawing of 300. So we are done with the current account now. We can go for the total of the current account. Whatever side is going to be heavier, I will write the total of the heavier side on both sides. I will take the difference of the two sides, right? And I will write it on the lesser side. I am expecting that this side is heavier for Carlos. So that is 17775. Let me calculate. 17775 and minus 1300 minus 10,000, which is the salary, and minus 2520. That is 3955. So there is a negative balance of carried down, a debit balance of Carlos carried down, which is going to be 3955. So he is going to have a loss actually. You can say that it is a negative balance, debit balance of Carlos 3955. And if we talk about Rika was also already having a negative balance of 250. It's a debit balance. And now I think the debit balance is going to increase more. The 250 plus 925 plus 25,000 plus 300. The total is 26475. 26475. I will write the same total over here, which is 26475. And I'm going to subtract the credit side minus 15,000 and minus 840. So 10635 is going to be the loss of Rika, which has gone even more. Because of the drawings, they are going for much more drawings actually. And that is the reason they are facing such losses, because they are going for heavy drawings actually. Right? Heavy drawings and heavy salaries. And because of that reason, they are sustaining a loss. That even the Carlos loss has been converted, Carlos profit or the credit balance in the current account is now converted into debit balance. So let's go back. Any problem till here? It's a simple question of partnership. But as it is we are sustaining a loss, obviously when the question is going to come in AS level, at AS level, so he basically goes for some changes, which includes the depreciation charge, which has needs to be subtracted, and appropriation account and negative loss and other things are part of that. So let's see. Appropriation account we have prepared. Current account we are done with that. The following information is also available. Credit sales, credit purchases are given: inventory, bank overdraft, other receivable, other payables. Trade receivable collection period 46 days, 31 days for 2016 and 17 it is 46 days. Trade payable payment period was 39 days and 36 days. So remember that we always find it good to collect the amount from trade receivable quickly. It is always better to collect the amount from trade receivables early. So trade receivable collection period is 31 days in 2016 and it has reached to 46 days. So that is not good, because we are taking more time to collect our customers, which is not good for the business. Trade payment period ratio should be high. It was 39 days. Now it has been decreased to 36 days. That is also not good, because we are making the payment early to our trade payables, sorry. We are making early payment to trade payables, but we are collecting the trade receivables at a later stage. Or you can say that we took 36 days. We are making the payment to the trade payables in 36 days, whereas we are collecting the amount from trade receivable in 46 days after 10 days. After making payment to trade payables, even 10 days more, after more 10 days, we are getting the amount. So that is not good. Previously, it was fine. Calculate the following: trade receivables and trade payables. Assess the working capital position of the partnership. Oh, we have already discussed that. And how we are going to calculate trade receivables and trade payables. Advise the partners 3 ways in which they could improve the cash position of the business. So they can introduce more capital into the business. They can take a bank loan, right? They can sell obsolete non-current assets. They can delay payment to trade payables. They can give cash discount to customers for early collection. Now, how you are going to calculate trade receivable and trade payables? The formula you use is basically trade receivable over credit sale into number of days in a year, which is 46. Trade sale is given. You can put the amount and you can find the trade receivables. Same is the case with trade payables. Trade payable over credit purchases into number of days in a year, which we usually take 365. So you can find the trade payables also because ratio is given. Remember that this is for 31st July, right? 2017. So we are only using these particular figures, 46 days and 36 days, right? So that's it. Inshallah ta'ala, when we are going to go for the ratios, then we'll do that particular stuff also regarding the trade receivable and regarding trade payables. So if you want to do it, okay, let's trade receivable, do it over credit sale, which is 385,000 into 365 is equal to 46. If you solve this, you will get the amount of trade receivables. I can calculate it for you. 46 divided by 365. It's quite simple. 46 divided by 365 multiplied by 385,000. So 48520 is going to amount of the trade receivables. If you talk about trade payables, so the formula is going to be trade payable over credit purchases, which is 172,000 for 2017 only, into 365 is equal to 36. So if you calculate it, 36 divided by 365 multiplied by 172,000, that is 16964. So the trade payables are going to be 16964. So we are done with the question. Any problem you can ask me, otherwise thank you very much. Inshallah, see you in the next class. Okay. Okay. Allah Hafiz.